Okay, at this point in time, we're through the cash and bank account, which is by far the largest account. What I made something like an 11 or 12-minute video for you. These will be a little bit quicker. I don't know how, if I'm going to split this into two sections or not yet. I'm just going to roll and see where we get. So here we are dealing with the second account. And again, remember, the second account, basically it's the second account according to its account number. So you'll see that this is accounts receivable to Mrs. Desario, and she is account number 110. So that's why I consider it the second account. We have on December the 8th our first account affecting Carla, accounts receivable Carla Desario, $36, and that is for group lesson fees. So we're waiting on payment from Carla on December the 8th. So we charged her $36. This is coming from General Journal page 1. Again, $36, and the normal balance side is the debit side, so that's where we're going to keep our totals at. Our next transaction occurs on the 13th, and this is where we accepted cash from Carla. So she paid us back on the 13th. She paid us, this is G2, my General Journal page 2. She paid us the 36. So she owed us 36, she paid the 36. We now have a zero balance. Remember, we try our best to indicate zero balances with dashes or straight lines and not zeros. I know it's accounting, so it can be, or Excel, so it can be a little difficult to do that. So that is accounts receivable 110. All right, so let's move over to our next accounts receivable account. And this is going to be to George McGarty. So I'm going to roll up to this account. Okay, we only had one transaction for George during this time period, and that is on the 10th of December, where we sent him an invoice for $275 for giving a group lesson. So again, this is coming from page 1 of my General Journal. We have a debit of $275. That's what he owes us, and we have a balance of $275. There are no other transactions. So at the end of the month, we have an outstanding bill waiting to get paid from George McGarty. All right, that's account number 120. Okay, our next account is office supplies, and this was on the 2nd of December. So on the 2nd of December, we purchased $73 worth of office supplies by writing a check, and that was check 102. So here on the general ledger, I have office supplies as my account. We know account number is 140. On the 2nd, page 1 of the journal, a debit of $73. Normal balance side for office supplies and asset is the debit side. So we just have a balance of $73, no other transactions. So when we go to our trial balance after this, this will be our balance now at the end of the month for office supplies. Next, we have office equipment. We have two transactions that occurred with office equipment, the 2nd and the 10th. So let's take a quick look at those. On the 2nd, we bought $525 worth of office equipment. Could be a chair, desk, whatever it might be. We wrote a check, check number 101. So here, coming from page 1 of the General Journal, on the 2nd of December, a debit of $525. Normal balance side for office equipment is $525 debited. And then on the 10th, oh, am I missing something here? Sit tight here. I'm going to take a quick look. Okay, so the magic of being able to pause, I just took 3 or 4 minutes and updated this General Journal. I had mistakenly left out the second transaction on the 10th. So I just plugged that in here. So again, that is going to be December the 10th. All right, we bought some office equipment, and I will update this. This is now page 2 of the General Journal. A debit of $2,375 payable to the TNN School Equipment Store. So now, if I had $525 and I add an additional office equipment to my store, my new office equipment balance is $525 plus $2,375, giving me a balance of $2,900. Sorry for that little mistake. Hopefully you're able to kind of sort through that. This office equipment account is correct. This General Journal is now updated and correct. Okay, let's move over to our next account, instructional equipment. We have two accounts affecting our instructional equipment. They are the 5th right here, instructional equipment, account 155 for $13,924. That's coming from page 1 of my general journal. Instructional equipment is an asset account. Its normal balance is the debit, so I write the balance of $13,924. And then on the 6th, instructional equipment of $8,494 purchased by the from the educational software company through an invoice. We owe them money. All right. So, anyways, it's the 6th, general journal, page 1, an additional $8,494 in instructional equipment, adding to the previous $13,924 gives us a new balance of instructional equipment of $22,418. Again, on the debit side, because it's an asset, and its normal balance side increases on the debit side. Okay, so let's move over to liabilities. All right, so now here we are in liabilities, account number 210. That's accounts payable to the educational software company. That's the transaction we just dealt with. Educational software company is owed $8,494. Normal balance side for a liability is the credit. All right, so our balance is going to occur on the credit side. Page 1 of the general journal. Then on the 14th, which is actually page 2 of the general journal, I'll go ahead and update that as well. Again, yours might be different than mine, and that's okay. But on the 14th, you'll see we paid off part of our debt to them. We paid them $200 of the $8,494. So I might have a mistake here again. Let me do a quick check. Yeah, I do have a little mistake. It's not major. I just made a stupid number mistake. And these will happen. These will happen all the time. So I was right in that it was $200 that we paid off, just a little small chunk. But we had $8,494, and we're actually subtracting $200. I have no idea how I came up with $9,000. That number should be $8,294. So my new balance being carried forward, or money owed to the educational software company, is $8,294. All right, let's move on to our next accounts payable account. This is accounts payable to the T&N company. This occurs on the 10th of December, and that was the one that I just recently added. Forgot to put it in the general journal there. And comes on page 2 of the general journal for me. I'll update that. And I have a credit of $2,375 or money that I owe them. Normal balance side for a liability is the credit side. It's my only account for the T&N school equipment account. So I have a balance of $2,375 for T&N school equipment. Let's take a look at Miss Rachel's capital account. We just have the one capital account that occurred way back on the 1st of the date, 1st of the December. All right. On the 1st of December, on page 1 of the journal, she deposited $25,000 into her own checking account. Remember that a capital account's normal balance side is $25,000. The best way, again, to refer to the capital is your overall company's net worth. So when she made that first transaction and she had no office supplies or no office equipment or no money coming in or coming out, just that first simple day, she had a value in her business of $25,000. That was the only transaction that was affected by her capital. There were no additional investments. That might be a word that you've heard or recognized a little bit, but no additional investment, just the one-time investment. All right, let's move over to her withdrawals. I always get a little chuckle whenever we talk about withdrawals. It just takes me back to our times in class and talking about Maria and her hot date Slevin. Hopefully you all get a little laugh out of that too. Here we have on the 18th, she did take $500. I don't know what it's for, but regardless, she took $500 out of her account. It comes from page G2 for me. Again, just doing some updates on my own. Normal balance side for withdrawals is the debit balance. It was her only withdrawal during the period, and so her balance at the end of the month for withdrawals is $500. Now we're going to move into some revenue accounts. All right, and you're going to note that I wrote the word revenue in parentheses, okay, and that's okay. It just wants you to know that fees and revenues are essentially the same thing. So this is account 401. We have 2 times where we collected some revenue. And the first one is on the 8th, where we did the group fees for Carla, and it was a $36 collection. Normal balance side or the increase side for revenues is credit, and so the normal balance side or the increase side is credit. And then on the 10th, we did the same thing. We gave some group lesson fees to George McGarty, and that comes from page 1 for me as well. $275 added to the 36 gives us a new amount of money for revenue of $311. So through all this work that we did setting up the business, we have a $311 of cash coming in at this point in time on group lesson fees. Now, we also have private lesson fees, and this is where she seems to make a little bit more of her money. This must be the bread and butter of her business. Private lesson fees, again, put in parentheses the word revenue, account number 405. So on the 5th, she gave a private lesson for $950. I don't remember who it was to or whatever. It doesn't really matter because we received cash. We don't have any money waiting to be paid to us. So we just go ahead and record that lesson fee as a credit. All right, that's the normal balance side as well. So we have a credit of $950. And then on the 11th, on page 2 of the general journal, we also did private lesson fees and received cash of $695. So we have the $950 current balance, and we add the $695 that she just completed, and we have a total of $1,645 as our new balance for private lesson fees revenue, account 405. So the last few accounts we have are going to be expense accounts. I'm going to save those for the next video, and we'll go through the expense accounts and wrap this up. Okay, see you in a little bit.